Hi, welcome back. You're watching Power Breakfast on CNBC TV 18. Moving on, the two macro data points that indicate economy is still in the slow lane. Credit growth of banks is much slower in August this year compared to last year, and growth in 8 core sectors has contracted by 0.5%. Output from coal, crude, oil, cement and electricity saw a sharp contraction. Lata Venkatesh joins us with her analysis. Lata, over to you.
Well, the data clearly is screaming out slowdown. The non-food credit, which is what you look at here, not so much food credit because it's seasonal, the non-food credit in August has grown by just 9.8%. Last year, same time, it was 12.4%. And just up until, the previous month, July, it was rising at 10.2%. So clearly, we have slowed in the month of August in terms of loan growth, and credit to services as well as manufacturing has gone down. To services, it's gone down to 13.3%. Last year, same time, it was 26%. And we all thought retail is picking up and not organized corporate capex. No. Personal loan growth has moderated to 15.6%. It was 18% year ago, August. So credit data not at all looking good. This is kind of buttressed by the kind of poor performance of the core sector numbers that came in August. The worst performance was put in by coal, down 8.6%, electricity down again 2.6%, and cement as well. That's the surprise factor. That also fell by about 4%. The only good performers were steel and crude oil. Well, this just reiterates the slowdown story. Maybe it is a bit exaggerated because of the widespread rains in August, but nevertheless, it's the credit data that will rankle with economists.
Well, the government has left its borrowing plan for the second half of this financial year unchanged, and this was confirmed by Economic Affairs Secretary Atanu Chakraborty, who also asserted that the centre is sticking to its 3.3% fiscal glide path for the financial year. Sovereign bonds are not part of this year's borrowing program.
The government also plans to issue floating rate bonds to the extent of 10% of the gross issuance. The T-bills would be brought down by 20,000 crore at the end of Q3. We'll also have certain switching and buybacks. That speaks that the fiscal glide path, as indicated in the budget, is being maintained.
All right, fiscal deficit data from April to August was also released. In the first 5 months of this financial year, government has hit nearly 79% of its full year target. Let's go back to Lata now for an analysis. Lata, what is the status quo on borrowing and an increase in the deficit? What do you make of this?
Well, before I come to borrowing, the fiscal deficit number April-August is not looking good at all. We have already consumed 79% of the full year's deficit. Now, deficit is always higher in the earlier months because tax collections are more hefty in the second half, especially in the fourth quarter. But still, 79% of full year deficit already captured in the first 5 months is not very good. The tax mop-up has been really bad. But receipts have still nevertheless done well April to August because of the massive 1.48 lakh crore extra dividend that came from the Reserve Bank. Spending has been higher. So when the borrowing program for the second half stands at the same level as was budgeted, it should normally have raised eyebrows. But what one might expect on Tuesday is actually a rally in the bond markets, because the bond markets may look at the divestment announcement, the Committee of Secretaries saying that the aggressive divestment originally promised is kind of getting materialized, and the group of secretaries agreeing for a full-fledged divestment of BPCL may counter any bad news of higher fiscal deficit.
Okay, all right. Let's take a quick check on the Asian markets. And early this morning, the overnight handover was pretty positive. We had the Nikkei that was sitting with strong gains today. That, in fact, is still holding with gains of around 0.8%. The Kospi as well is in the green. And the other couple of markets as well that have opened up, it's a positive tick. So good news. Remember, trading volumes may not be very, very high because, the Shanghai market as well as the Hang Seng, both of them, they are shut in today's trading session. What does this mean, though, for the SGX Nifty? That's indicating that we're likely to start off in the green with a gain of close to around 35 to around 40 points or thereabouts. Well, on that note, we'll slip into a short break. You come back, we'll cover all the news that came in overnight. Stay with us.